What's up, everybody? It's your man's the Trucking Trader, and we are back with another legendary video. If y'all would be so kind as to hit that like button as it supports the channel, I would greatly appreciate that. Let's get straight into this video. In my last video, it was kind of like a part one. I was showing you guys how I use long wicks to form a bias and also to get really precise entries in the market. And in this video, I want it to be a part two video. I want to break down the trade that I took last Friday and show you guys exactly what I seen in the market and how I entered that trade. So in that video, I was showing you guys this wick right here, this long wick. And I always tell y'all that how I do it is I use my Fibonacci tool and I measure the top of that wick out just like that. Okay, I gotta make sure that the measurement, okay, so if you can see those blue lines, the bottom blue line is where I start on the wick, and the top blue line is where I end at. All right, you always use the Fibonacci tool from the left to right, right? That's just a basic tip, all right? So in that video, I was telling y'all that I was looking at this wick right here, and I wanted to see if the market was going to close above it, close below it, but ultimately, I felt like the market was going to bounce from that wick to this wick, right? Meaning this, I thought that the market would essentially do something like this, right? I thought that it would maybe go from here, go up, and then, you know, come down, and then, you know, maybe go up again, right? So that's essentially what I was looking for in the market last Friday. And even before the market opened, that's kind of what I was looking for. And it was only because there was like no news, anything like that. So I wasn't really expecting the market to have like a really a fast moving day, a really big range day. So that's what I was pretty much looking for. But this is the daily time frame, by the way, you guys, just in case I didn't put that out there. Typically I like to start my trades with a top down analysis. I don't always look at the weekly chart every day, but every day I do look at the daily, the 4 hour and the 1 hour chart, right? So I was on the daily. We could take a look at the 4 hour, see if we see anything here. Last Friday. So last Friday started about right here on this candle. Okay. So what I'm going to do is show you guys what I seen, right? So on the 4 hour, let me remove these two Fibonacci's. I just wanted to show y'all where those yellow lines was at, is where the midpoint of those wicks was at on that daily wick, right? So all I did right here was I used this little small range right here from swing low to swing high. And what I noticed was that I had an order block right here. Now, I did not take this order block trade because when it hit the order block, I think it hit it like maybe around 9:30 exactly. I try not to trade exactly at 9:30. But as you guys can see, the market did indeed hit this order block, and then it sold off. So I pretty much knew that the market was in like pretty much a sell type of day. So I just keep dropping down on my time frames. So let me see. This happened at 9 a.m. So this happened before I like to start trading, right? But we had this order block. Then we had on the 1 hour time frame, we had another order block right in here as well. I can mark that out for you guys right here. If you don't know what an order block is, I can make a separate video on order blocks. Essentially, it's like it's essentially a big move. So like how this big candle is right here, and then it's just essentially how ICT explains it. He says that it's a change in price delivery, right? So if the market was going up heavily and then it suddenly just went down, typically you would see a order block formed in that market, right? Just like how you see right here, the market had 1, 2, 3, 4 green candles, and then it had this little small red candle. That's an order block. You know, it had some small red candles in here, so that's an order block. But as you guys can see, the market did respect this order block 1, 2, 3, 4, 5, 6 times. You know, every time it went in there, it respect that order block. So let's keep dropping down in time frames because I want to show you guys how I found my trade last Friday, right? So now we are looking at the 1 minute chart. Okay, let's zoom in on this. We are looking at the 1 minute chart. Okay, so remember that the market was going into this order block. Every time it was going into this order block. And I believe I found my trade about right here. So pay attention to the time, right? The most important thing in trading is what? Time and price. So if you can look at where my vertical line is at, that's 10:11. That's about the time that I typically like to trade. I don't like to trade the first 30 minutes of the day. I always wait the first 30 minutes of the day. So what I seen right here was we had pretty much 2 equal highs. I'm going to remove this order block. I want y'all to remember that the order block was on the chart, but I'm going to remove it because I want to teach and I don't want it to be in my way, right? So right here we had these 2 swing highs. Let me use a trend line because I think that would be a little bit better in this case, right? So we had these 2. Okay, well, I got it going all the way through my chart, so y'all just gonna have to deal with that for now, right? But essentially we had these 2 equal highs right here, right? And then the market came up and then it took this liquidity. So after the market took this liquidity, what ended up happening on a 1 minute time frame was we seen a fair value gap formed right here. Right here. So I'm going to mark that out for you guys so y'all can see that. Okay. We seen a fair value gap right here. Mind you, this is a very slow, nothing special was really happening on this day, right? On top of this little fair value gap in here, we seen an order block coupled with it. So the only thing that I did was I just followed the market. I know that we're hitting the order block. The order block kept rejecting the market. So I'm just trying to get on trend. You know, that's all I'm trying to do. So after I seen this fair value gap form, I started to enter the trade about right here. I started to enter the trade right here, and as it was hitting into this order block, I was taking sales right into here as well. And my take profit was about right here. So if I show you guys, let me see. If I put this, let's just say, all right, I put my stop loss right above the order block. I like to put my stop loss 10 points above where I'm looking at pretty much. So it would have it looks a little bit different on Trade Locker. So this one may not give you the proper risk to reward, but the trade would have looked something like this. I think, did I target this? I think I did target this. So I can't remember. Oh, you know what? No, I had got out about right here because I seen an order block right here as well. So let me mark out this order block. Right. And for those of you who don't know what candle I'm talking about, it's this red candle right here. So I marked out that order block and I got out about right here, right above this. So I must have got out about right here. I did hold this trade for a long time. So that do make sense. As y'all can see, this was like a really choppy trade. It did give me about a 1 or 2. It doesn't say it on here right now, but it was like a 1 or 2 on my Trade Locker. So that was essentially the trade. And that's how I use long wicks to find an entry. You know, so just play this video back and you guys can see exactly step by step what I like to do. How do I form my bias? Start from the higher time frames. I'm looking for order blocks. I'm looking for fair value gaps. I'm looking for long wicks. From there, I figure out the bias. Now, think about what I was just telling y'all. On the higher time frames, we was uptrending. We was uptrending, but it was Friday and we was hitting into this order blocks and the market kept rejecting the order block. So even though on a higher time frame we was uptrending, I still took a sell because that's what the market was giving. That was the smaller trend that made sense, was a sell. It makes sense for me. I mean, I guess I could have bought, you know, depending on how you looking at the market. Yes, you could have used this order block to take in a buy as well. There's nothing wrong with that. It's just that this was happening at 10:09, 10:11. That's typically where I like to trade. By the time the market hit this order block, it happened at 11 a.m., which is nothing wrong with that. I probably would have taken this trade as well, but you know, just to be on side. And I do feel like this shows you how important it is to like follow the trend, because this, even though this was choppy as well, this was a much cleaner move to the upside compared to, you know, this little down movement. But either way, I wasn't really worried. I was just pretty much paying attention to price action. And as long as price action did what I needed it to do, I was going to be comfortable in my trade. So that was my trade breakdown from last Friday. I made about 2% in my prop firm account. And that's pretty much the part 2 on how to use long wicks to find a trade, to get precise entries, and to get on the right side of the market. If y'all found any type of value out of this video, make sure y'all hit that like button. Leave a comment down below if you guys want me to touch on anything in particular, and subscribe to the channel. There will be more content coming out. I'm in the middle of getting a laptop right now so I can start going live and trading with you guys live, and hopefully teaching some people live, because my goal is to pass some of the information that I got from ICT down to, you know, people who need the information, because I do feel like it's priceless information, man. And I appreciate him for giving that information out for free. So leave a like, subscribe to the channel, and I'll see y'all in the next one.